The global economy is at a crossroads as we enter 2025. Optimism is fading, uncertainty reigns. The fear of a 2025 economic meltdown is palpable. We are facing a multitude of challenges. The wrong policy choices could have devastating consequences. For a brief moment, there was hope. The global economy seemed to be recovering from the shocks of the pandemic. Supply chains were slowly normalizing. Demand remained robust. But this fragile recovery has sputtered. Central banks are caught in a bind. Inflation, once considered transitory, has proven to be more persistent and insidious. The cost of living is rising at an alarming rate. This is eroding purchasing power and squeezing household budgets. Consumers are losing confidence. Businesses are delaying investment. The specter of a global recession looms large. Some economists argue that a downturn is inevitable. Others cling to the hope that we can navigate a soft landing. One thing is clear, the margin for error is razor thin. The decisions made by policymakers in the coming months will determine our economic fate. Inflation has returned with a vengeance. It is no longer a whisper in the background but a roaring inferno. Prices for essential goods and services are skyrocketing. What was once unthinkable has become the new normal. Energy prices have soared to record highs. Supply chain disruptions and geopolitical tensions have exacerbated the situation. Food prices have also surged. Families are struggling to put food on the table. The cost of housing is becoming unbearable. Rent and mortgage payments are consuming a larger portion of household incomes. This is not just a temporary blip. Inflationary pressures are deeply embedded in the global economy. Companies are passing on rising input costs to consumers. Labor shortages are driving up wages. These factors suggest that inflation is here to stay for the foreseeable future. Central banks, caught off guard by the persistence of inflation, are now scrambling to catch up. They are raising interest rates at a rapid pace, but their actions risk triggering a recession. It is a delicate balancing act with very high stakes. Central banks are the guardians of economic stability. Their primary mandate is to maintain price stability. Yet, they have been slow to react to the threat of inflation. Now, they find themselves in a difficult position. Central banks are raising interest rates. They hope to cool down the economy and tame inflation, but these rate hikes are not without risk. Higher borrowing costs could stifle economic growth. Businesses may pull back on investment. Consumers may cut back on spending. The U.S. Federal Reserve has been particularly aggressive in its rate hikes. The European Central Bank and the Bank of Japan have been more cautious. This divergence in monetary policy is creating uncertainty in global markets. It is also putting downward pressure on currencies like the euro and the yen. The effectiveness of central bank actions remains to be seen. Inflation is proving to be more stubborn than anticipated. There is a growing sense that central banks may have waited too long to act. The longer inflation persists, the greater the risk of a hard landing for the global economy. Central banks around the world are facing different economic circumstances. This is leading to divergent monetary policies. This lack of coordination is adding to the uncertainty in the global economy. The U.S. Federal Reserve is laser-focused on fighting inflation. It is willing to risk a recession to achieve its goal. The European Central Bank is more concerned about the impact of higher interest rates on heavily indebted Eurozone countries. The Bank of Japan, facing a deflationary environment for decades, is reluctant to raise interest rates at all. This divergence in monetary policy is creating volatility in currency markets. The US dollar is surging against other major currencies. This is making it more expensive for other countries to import goods and services from the US. It is also putting pressure on emerging market economies that have borrowed heavily in US dollars. The lack of coordination among central banks is a cause for concern. It is reminiscent of the 2008 financial crisis, when a lack of global cooperation exacerbated the crisis. We need greater coordination and collaboration among central banks to navigate the current economic turbulence. Section 5. The looming specter of government debt. Government debt has reached staggering levels in many countries. This is a legacy of the pandemic, when governments borrowed heavily to support their economies. Now, as interest rates rise, servicing this debt is becoming increasingly burdensome. The United States, for example, has a national debt that exceeds $31 trillion. Interest payments on this debt are already a significant portion of the federal budget. As interest rates rise, these payments will consume an even larger share of government revenue, leaving less money available for essential services like healthcare, education, and infrastructure. The situation is even more precarious in some European countries. Italy, for example, has a debt-to-GDP ratio of over 150%. Greece, Portugal, and Spain are also saddled with high levels of debt. Rising interest rates could push these countries into a debt crisis. The specter of a sovereign debt crisis hangs over the global economy. If a major economy were to default on its debt, it would trigger a financial meltdown. Investors would lose confidence in government bonds, leading to a spike in interest rates and a collapse in asset prices. This is a risk that we cannot afford to ignore. Section 6. Trump's return, a catalyst for economic upheaval. Donald Trump's return to the political stage injects a new element of uncertainty into the global economy. His unpredictable nature and penchant for protectionist policies have unsettled markets and investors alike. Trump's trade wars with China and other countries disrupted global supply chains and increased costs for businesses and consumers. His tax cuts, while providing a short-term boost to the economy, have also contributed to the growing national debt. Trump's return to power could lead to a repeat of these policies. He has already threatened to impose new tariffs on Chinese goods and to renegotiate trade deals. His disdain for multilateral institutions and his preference for bilateral agreements could further fragment the global trading system. The uncertainty surrounding Trump's economic policies is already having a negative impact on business confidence. Companies are delaying investment decisions, and consumers are becoming more cautious with their spending. Trump's return to the White House could be the catalyst for a global economic downturn. Section 7. Geopolitical tensions fuel market volatility. The world is facing a multitude of geopolitical risks that are adding to the economic uncertainty. The war in Ukraine, tensions between China and Taiwan, and ongoing conflicts in the Middle East and Africa are all contributing to market volatility. The war in Ukraine has disrupted energy markets, triggered a food crisis, and fueled inflation. The conflict has also led to a reassessment of geopolitical risk, prompting companies to rethink their supply chains and investment decisions. Tensions between China and Taiwan have also escalated in recent years. China views Taiwan as a breakaway province and has vowed to reunify the island with the mainland by force if necessary. A conflict over Taiwan would have devastating consequences for the global economy, given Taiwan's importance as a producer of semiconductors and other high-tech goods. The ongoing conflicts in the Middle East and Africa are also contributing to instability and uncertainty. These conflicts are displacing millions of people, fueling terrorism, and disrupting trade routes. They are also diverting resources away from development and towards military spending. These geopolitical risks are a reminder that the global economy is interconnected. Events in one part of the world can have ripple effects that are felt far and wide. As long as these risks persist, they will continue to weigh on economic growth and contribute to market volatility. Section 8. A delicate balancing act. The global economy is teetering on a knife's edge. We are facing a confluence of challenges, any one of which could trigger a downturn. Policymakers are caught in a delicate balancing act. They must address inflation without causing a recession. They must manage government debt without stifling growth. And they must navigate geopolitical risks without undermining global cooperation. The task before us is daunting. There is no easy solution. Success will require careful calibration of policies, clear communication, and international cooperation. It will also require a willingness to make tough choices and to adapt to changing circumstances. The stakes could not be higher. A global recession would have devastating consequences for billions of people around the world. It would lead to job losses, business failures, and increased poverty. It would also exacerbate social and political tensions, potentially leading to unrest and conflict. Section 9. The high-stakes prosperity or meltdown. The year 2025 began with a mix of hope and trepidation. The global economy, while facing significant challenges, still held the potential for growth and prosperity. However, as the year has progressed, the risks have become more pronounced. Inflation has proven to be more persistent than anticipated. Central banks are struggling to contain it without triggering a recession. Government debt is a ticking time bomb, and geopolitical tensions are casting a long shadow over the global economy. The path forward is fraught with peril, The wrong policy choices could easily tip the global economy into a meltdown, but it is not too late to avert disaster. With decisive action, international cooperation, and a bit of luck, we can still navigate our way to a more stable and prosperous future. The stakes could not be higher. The decisions we make today will determine the fate of the global economy for years to come. We must choose wisely.